Bitcoin is risking 20% in losses, and that's without pressure from the feds at Jackson Hole this week. I'll give you 3 reasons why and more crypto headlines. Here's your Altcoin Buzz news. Hi, I'm Natalie and welcome to Altcoin Buzz. Make sure you are liked, subscribed, and notified when we drop our latest content. And if you want to see how you could earn $800 in bonuses on Binance and even 20% off trading fees through our exclusive Altcoin Buzz sign-up offer, then head to the link in the description. Now, let's dive into today's headlines. Bitcoin seems to have steadied out at 21K, marking its 4th day in this new range. BTC hasn't been able to make any moves since the Federal Reserve released last week's meeting minutes regarding inflation. There's also 3 other aspects as to why Bitcoin could walk the plank to a new 20% crash that I'll mention at the end of this video. But at the moment, it's kind of feeling like the market is holding its breath for what's to come of the Global Central Banking Conference in Jackson Hole, Wyoming. Namely, when Federal Reserve Chair Jerome Powell will speak on August 26th, which could spark how high US borrowing costs may go and for how long while the feds try to bring down inflation. Bitcoin did shock the community when it didn't budge from initial inflation updates, but could this time be different? Let me know in the comments. Part of why Bitcoin could be so choppy is because many think it's just not mature enough as an asset. And with inflation in the mix, financial onlookers like Skybridge Capital founder Anthony Scaramucci says Bitcoin just isn't ready to be a potential hedge for inflation. Have a listen to the Squawk Box interview.
You just don't have the wallet bandwidth in Bitcoin. When I bought my first Bitcoin, it was about 80 million wallets according to Glassnode. There's probably 300 million wallets globally today. Until you get into the billion plus zone, Joe, I don't think you're going to see Bitcoin as an inflation as it's still an early adopting technical asset. But I will say this, people are not paying close enough attention to what BlackRock is doing. If Larry Fink and his team is setting up a product related to Bitcoin, that is telling you that there is institutional demand out there. Whether they have a positive or negative opinion on Bitcoin, it doesn't matter. There was an expression back at Goldman Sachs in the early 90s, Joe, feed the ducks. If the ducks want Bitcoin, set up a product and feed the ducks. And so I think this is a huge thing that's not being, it's not saying it's overlooked, but it's just not being expounded upon as much as it should be.
Cryptocurrency data cruncher LunarCrush is gearing up to launch its V3, and this version is bringing its signature social data sharing experience with better and faster results. LunarCrush says that this V3 API offers 3 major upgrades, from a new streamlined delivery system for investing, trading, and research, space for developers to build and scale their apps, and an integration for Lunar tokens and other payments in the new credit model. It's definitely worth getting the full scoop before this upgrade launches, so give it a read here on the link on the screen. Crypto.com Arena is finally starting its multi-million dollar renovations. This 9-figure investment plan will take 2 to 3 years to complete. Here, you can have a look at what the former Staples Center will look like for the LA basketball and hockey scene. And by the looks of it, there looks to be an emphasis on the VIPs attending these games and events, but nonetheless, it cost the crypto exchange $700 million to get the naming rights for the next 20 years. And they're all in on their brand awareness strategy despite major layoffs from crypto winter. So back to why there's major rumblings of Bitcoin tanking another 20%. Reason number 1 is that the rising dollar has put pressure on the cryptocurrency. Bitcoin has not been able to get off the seesaw of a strong dollar-weak BTC relationship. And this give and take is reflected in the total crypto market cap dropping to $1 trillion. The neutral to bearish market indicators have been worrisome to some analysts, and investor sentiment has been sour towards crypto as well as commodities and growth stocks, which has led to fresh 30-day lows in the fear and greed index, meaning the bears are back in the driver's seat. Last but not least, reason number 3 for a Bitcoin crash would be the sheer amount of BTC wallets that are in the red. especially those new hodlers who bought Bitcoin in the last few weeks. And so far, the 7-day moving average of wallets with losses has hit over 17.5 million, with 1.5 million of those wallets coming over the last few days, which happens to be the most wallets with losses that we've seen all month. That's it for your Altcoin Buzz news update. If you enjoyed this video and want more insights for your crypto investing, then smash the like, subscribe, and notification buttons to get all our latest content. And have a look at the other updates and deep dives on our channel. Here's some videos to get started with. As always, this is not financial advice, but we wish you the best of luck in your crypto ventures. Thanks for watching and see you next time.